all of our audience in tune right now, Carol, to what is a massive rally across the board in U.S. equity markets.
Yeah, broad-based buying in a big way. I'm just looking at something like the semiconductor space. You look at the stocks, it's up about 4.2%. All 30 names in that index, Matt, are higher today.
Yeah, it looks like one of the biggest reactions that we've seen on the day after a Fed meeting since 2008. And it's interesting that yesterday, I'm sure you've been talking about this for the whole program, Romaine, but yesterday we had the market retreat. And I guess something happened overnight where they said, no, actually, I think this is worth a 2% pop.
Yeah, it's like the knee-jerk reaction, and then I guess, I don't know, is it a more sensible reaction, Vonnie?
I don't know, but it's fascinating because you had almost all of the sectors absolutely higher. So if you look into the map of the S&P 500, there's really very few that are lower, maybe utilities, a couple of the more defensive plays, but even the home builders as a group were lower today.
I'm gonna say it's about options tomorrow, guys. So you had the 50 basis point cuts. You have the biggest September expiration for options. We're looking at over $4 trillion worth of options expiring. You're going to have to change your positions for that.
Yeah, and it's interesting, too, on a day like this to see the moves in the Treasury space, which is actually not a whole lot of moves at all. We're going to get back to that in just a second. But green across the screen for U.S. equity markets, more than 80% of the stocks in the benchmark indices posting gains for the day. The Dow Jones Industrial Average going to close above 42,000, up more than 500 points on the day, or roughly about 1.3% as we wait for these numbers to settle. The S&P 500, 5713.67. That's a record high, up 95 points from where it closed yesterday, a 1.7% gain. We should also point out that the NASDAQ Composite, while still far from its fresh record high, did add about 440 points today, or about 2.5%. The Russell 2000 getting in on the action as well. A gain of 2% on the day. And Carol, I just want to mention S&P 400 mid-caps up 1.7% here on the day. That is also a record high here. So interesting to see what's hitting a record high today. It's not tech, it's not the Russell, it's some of those mid-cap stocks.
Yeah, right, broadening out. We've talked about this with a lot of strategists, and this is what they want to see maybe a little bit of a healthy market, if you will, in terms of gains. Having said that, back to the big caps I go. Romaine, you mentioned this, 351 names in the S&P 500 gaining ground on this Thursday, and 148, Vonnie, to the downside.
Exactly, nearly two-thirds to the upside, as you mentioned, Carol. Let's take a look into the map of the S&P 500. Look at that, green practically across the board. As I said earlier, just a couple of defensive sectors a little lower, but really, consumer staples as a group down 0.6%. Not much to write home about when you see the outsized moves to the upside for the likes of information technology and consumer discretionary. Interestingly enough, even as we talk about the consumer weakening potentially just a little bit, we are seeing discretionary perform extraordinarily well off the back of that 50 basis point cut.
All right, so with the S&P 500 closing at its first record since July, the number one gainer in the S&P 500, everybody, Darden Restaurants, right? Yeah. Up more than 8%. I know, who doesn't love, like I said to
America
Matt,
is back.
There's no way that you go to Olive Garden, Carol. I highly point this out.
My dad used to love Olive Garden, and so I would go and get that tour of Italy with him. Yeah, it was really kind of sweet.
It sounds lovely.
It was really fun. All right, Darden Restaurants up more than 8% here. Company announcing a new delivery partnership with Uber Technologies, saying sales have continued to improve following soft customer traffic in July. People were a little bit worried about that. Also signaling it's succeeding at attracting cash-strapped consumers into its eateries. So big outperformer there. I mentioned the stocks, really outperformance there. All names in the stocks higher today. Advanced Micro, though, among the outperformers, up 5.6% in today's session. We really did see that Fed move give a juice to the semi-sector, also some of the AI names in particular. And then NVIDIA, I want to point out, that's another one that gained in today's session. And you saw that one up about almost 4% in today's trade. And then I just want to mention something a little bit different. Edgewise Therapeutics, it's about a $2.5 billion market cap biotech company. And this one up 54% in today's session. The company provided top-line data of its investigative therapy for heart disease in 2 trials. Investors liked what they heard. And so this one really soaring in today's trade, Matt.
All right, I have,
what do you have?
Some movers that involve diseases as well, so I can top that. On the downside, right, 4D Molecular Therapeutics, FDMT.
Hey, Matt, I'm going to interrupt you here. We're actually getting FedEx earnings out right now. The shares plunging in after hours trading. Ooh, wow. The company providing a revenue for the first quarter, its fiscal first quarter, of $21.6 billion. That's slightly lower than what the street was looking for of $21.9. Adjusted operating margin, a big miss there, 5.6%. The street was looking for for 7.4. Operating income, 1.21 billion, a big miss there. The street on average looking for 1.63. And on the EPS side, $3.60 a share. The street was looking for 4.77. And here's your forecast, and it's not good. The company saying that full year adjusted EPS will be in a range of $20 to $21 a share. Its previous forecast was 20 to 22.
That is awful. You know, when I talk about the economy in relation to the Fed, right, I'm like, these rates aren't restrictive because we're looking at 3% growth and earnings were up 11% and unemployment's only 4.2%. If someone said, well, FedEx, the global bellwether, is going to miss on earnings and also on the outlook, I would say, okay, cut rates. That makes sense to me.
And remember that they had a fantastic quarter the last go around. I mean, they had a bullish forecast. The stock surged. I am curious. I don't see anything specifically about the consumer yet in their report. Also, remember, there's some questions about its freight unit and if they're going to spin it off, what kind of valuation that would present to unlock value, which after these numbers, you would think would be a very, very high priority.
Right, and we've been coming out of a freight recession, and so the hope was that we would see more of that this quarter round. Volumes were improving, but I guess FedEx's cost-cutting, efficiency measures, all of those strategies haven't come to fruition, at least this quarter, Carol.
All right, so FedEx is down about 12% in the aftermarket. Looking at UPS, it's down more than 3% in the aftermarket. Some commentary from the FedEx president and chief executive, Raj Subramaniam. He says, despite a challenging quarter, we remain focused on transforming our network, improving our efficiency, lowering our cost to serve, and enhancing our ability to adapt with speed to evolving market dynamics. But obviously, those evolving market dynamics are turning out to be a little bit difficult for FedEx. Again, that stock down almost 12% here, guys, in the aftermarket.
And it's kind of interesting, too. Of course, this is the first quarter where we sort of had the reorganization of those units, and this is the first time they've reported under that. And it does make you wonder how much some of this is idiosyncratic, specifically to FedEx, with regards to its costs, which are still high, its CapEx spending, which is still high. And if there is a macroeconomic situation where we are going to see weakness in shipments or weakness in the price that FedEx can charge for those shipments, that's not going to be good.
Yeah, no, I mean, this is what I think big macroeconomists look at to sort of gauge the health of the global economy. Now, just because you miss estimates doesn't necessarily mean it's that bad, but you have to be beating what you had in the same quarter last year to show some kind of growth, and it should be consistent with at least the 3% growth that we're seeing that the Atlanta Fed Now forecast sees us running at in the current economy.
Yeah, well, therein lies the rub, right? They say a low single-digit percentage revenue growth rate year over year versus their last forecast of low to mid single digits, right? So like that feels like that is a pure demand economy point. As Carol pointed out, demand trends weaker than expected. I'm interested in the call, though, guys. Are they going to talk about what they expect after the 50 basis point rate cut from the Fed? Does that change their outlook? How that's going to impact their business?
Yeah, that line on demand trends being weaker than expected, I want to hear more about that and what that actually means, because we're talking about the holiday quarter here at this point. This is when retailers are getting all their stuff. This is when the freight trains literally are running. So we'll have to see. It might mean that the Fed was right to go 50 basis points.
And this gets back, though, to that pricing issue. I mean, they say in here that they were negatively affected by that mix shift, as they put it. And we talked about this. The last quarter was a similar thing here, that volumes weren't necessarily suffering, but the type of stuff that people were shipping was not the higher margin or higher fee stuff that they would normally ship.
Yeah, meantime, you know, the company completed a $1 billion accelerated share buyback during the quarter, and it also expects to buy back another additional $1.5 billion stock during fiscal 2025. So continuing to keep kind of that momentum in place. But, you know, I always wonder, you know, buyback, I get it, but is it always the best use of your money?
Yeah, no, I mean, that's probably trying to dampen the blow, right?
Yeah,
they're like,
exactly.
We have had a horrible quarter and the outlook is really disappointing. Let's definitely buy back some shares because otherwise our price is going to get decimated in the markets, and it literally has as we watch right now.
Yeah, right now you've seen the stock down, what, about 11-12% here in the aftermarket. And again, UPS a little bit lower too, down about 1.8%. All right, guys, that's a wrap. Our cross-platform radio, TV, YouTube, Bloomberg Originals. We call it the closing bell. We will see you guys again, same time, same place tomorrow.